Good morning. It's Thursday, March 14th, about 6 a.m. Central Time. All right, the precious metals are mixed after yesterday's explosive rally. We have April gold down $5 at 21.75. May silver up 6 cents, 25.22. May copper down 1 at 4.04. April platinum down $4 at 9.40. And June palladium up 11 at 1081. So yesterday, that explosive rally, we saw gold up 0.5%, silver was up 3.4%, copper up 3.2%. It breached the $4 level yesterday. Platinum up 2%. The gold silver ratio dropped down to about 86 to 1. So yesterday I talked about how silver was actually going nowhere at the moment, but it was very constructive on the charts, and it looked like the gold silver ratio was going to sell off from about 89 down to the 85 86 level. 92 has been the recent high if you look at the 2024 and you map out that chart. So copper, it was really the driving force of the metals move yesterday. The magnitude of the breakout, it was quite alarming. So the two headlines that you need to know are that the Chinese smelters agreed to joint production cuts, and that Chinese smelters represent half of the world's global copper supply. Remember, China is the largest consumer of copper, and they're also one of the largest consumers of silver. So these two work hand in hand. Now, the funds were significantly short copper, and given the size of the move we saw yesterday, a 3.4%, that they really squeezed the market higher, and we saw a series of stop losses occurring here, and then also short covering. So we'll want to look at the commitment of traders report and see how they've been unwinding that particular trade. Now, the Chinese smelters, they triggered a raw material squeeze and that chain reaction. For those of you that work on our wealth management side, our clients already own Southern Copper, and we actually added to that position here yesterday. And also, that goes along with your metals and mining allocations. Now, if you want some more details, tune in to CNBC here for the halftime show. Bill Baruch, my partner, he's going to be on TV discussing some of these different moves for the hour block. So on the futures side, I was looking at some strategies for those of you that are not involved with the copper market, and you could consider something like buying where the breakout started to occur. So the 398, and there's a micro copper contract. It's about 2,500 pounds of copper. You go in at 398, 392, the original breakout point, 385, the 50-day moving average, and 381, the 200-day moving average. So you're going to have a scale-in approach on that. You put your stop loss at 378. So 398, 392, 385, and 381. So you're scaling into 1,000 pounds of copper. Your risk on that is going to be $1,100. If you put the stop loss at 378 to execute accordingly. So you really want to, what I generally typically do is I'll plan my trade and trade my plan. So remember, professional traders, they monitor the percentage risk of capital. So on a $100,000 account, it'd be $1,100 risk. So that's about a 1.1% risk on the account. And then they also look at the percentage of margin on their capital. And this is a very low margin, cost-effective trade here. So the margin on a micro copper is only about $500. So we're talking about a 2.5% margin on a $100,000 account. If you're going to implement a similar strategy on the silver market, you might look at something like 24.91 as your entry point, with the silver at 25.22. That's your breakout point on the charts. And then also yesterday's low, 24.35. So you do two of the 1,000 ounce contracts. You put a stop at 23.84, and that has a $1,480 risk. So 24.02 is going to be the 200-day moving average, and 23.32 is the 50-day moving average, way below there. So I'm mapping out two different strategies. If you want me to email you what the strategy is, I could do that as well. It's not a problem at all. The point is that you plan your trade, you trade your plan, you look at what your account is, and you look at the percentage that's at risk, and then you look at the percentage of the margin requirements at hand. So getting a little bit into the details of trading. Remember, each individual trader is going to have their own risk parameters and things like that. So not necessarily a recommendation, just a specific strategy, and I'm showing you how to implement the strategy at hand. Now, the gold market really didn't move here. The gold-silver ratio, again, 86-1, so silver did a lot of catching up on the gold market. Now, we're going to see gold move here today because U.S. producer price data is going to be out, and it's going to be the latest inflation data in this puzzle here before the Federal Reserve's meeting here next week. Those figures, those PPI figures, they feed directly into the PCE, which is the Fed's preferred inflation gauge. So you're going to want to take a look at this. It's going to move the markets. You're expecting a bit of a downtick. So you got any questions, give me a call. You want me to type up the strategy on something like the copper market, I could shoot it over to you, or the silver market, or we could build something else. A few other quick headlines here. We do have 5 straight days of gains in the soybean market. It has breached the 50-day moving average last night at 1203. It hasn't tested that level in 3 months, so this is a big level. Also, the sugar market recapturing the 22 level. India, they had they're increasing their production. That's why we saw a little bit of a sell-off yesterday, but you do have some dry conditions in Brazil. That's what helped get that market a bit higher. And then on Bitcoin, it did post an all-time high yesterday, taking a bit of a breather. So a little bit longer video here, but I wanted to map out some details because a lot of people are calling me, asking me how to trade silver and copper specifically. If you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.